Good morning all. Welcome to the 8th ICC Mutual Fund Summit. May I request Mr. Shiv Siddhant Kaul, Senior Vice President ICC, for his opening address.
Dignitaries in the audience, our speakers for this long day of sessions, and our delegates, a very good morning to all of you. Being an industry forum, I must say it's extremely heartening, heartwarming, and a great deal of pleasure in being in front of an industry where everyone is smiling. The mutual fund industry, I think, is an industry that is getting increasingly mature in India. Its contribution as part of a diversified economy is increasing, and we have only scratched the tip of the iceberg, because there is a huge opportunity in this space. There are lots and lots of citizens that have yet to understand this product. The market is phenomenal, and I really hope, for the sake of everyone, that this mutual fund industry can grow fast and reach every member in the society. So with that, I would like to stop here and hand it over to my friends who are in this industry, who are practicing day in, day out, and to hear from them what they are doing, and from everyone else how we can make this industry more productive and more engaged in our society. Thank you.
May I now request our Summit Chairman, Mr. Dinesh Khara, MD and CEO, SBI Funds Management, to please address us.
Morning, friends. The subject for today's this particular session is the present scenario and the way forward. I would like to draw your attention to the movements, the developments which the industry has seen in about last 2 decades. I think before that, of course, UTA was one of the major players, but about 2 decades back, the industry underwent a major overhaul, and many private sector players were also allowed to come into the sector. So I think that's a very significant period which we need to look into. In all these about 20-25 years time, the focus of the industry has been to grow in size, and also to create value for the investors. I think in that direction, the industry has been in a position to offer products which are essentially, it started with essentially plain vanilla products, and subsequently those products were also modified in terms of some kind of thematic funds, some kind of blended funds. So it has been a journey, and it has been an interesting journey over the period. And in the process, investors have also got educated. Investors have also learned the behavior of various products, and also have got the confidence. Likewise, the distributing community also has evolved over the period of time. The ultimate goal which I perceive, and which I always feel very strongly, is that the mutual fund houses and the distributors have to eventually create value for the investor, and will have to manage their hard-earned money in the most efficient manner. That is the only way this industry can grow, this industry can reap the benefit, and this industry can contribute for the growth and development of this economy. Thank you very much.
Finally, we request Mr. Sandeep Sikka, Chairman of AMFI, to please address us.
It's indeed a pleasure to be here again. Exactly 2 years back, I was at the same event, and ICC Mutual Fund Summit has become an annual affair, has an annual February affair. 2 years back, when we met in the February of 2013, the industry size was 8 lakh crores. Today we are touching 12 lakh crores. The Sensex that time was 19,000. Today, I think we should be touching 30,000 any time. The oil prices were $100+. That's the only thing which has come down, which also works to our advantage. Sensex has given a return of 20%. CAGR, and the top 5 mutual funds have given a return of 30%. So a lot has changed, and I really, for me, there's a lot of sense of satisfaction and happiness of what all stakeholders of industry have done in the last few years. Is this growth of the industry happening because of markets? Is it because of investor education? Is it, what could be the reason? I clearly, for me personally, and as AMFI, we believe this is happening for multiple reasons. And the first and foremost is the belief that all stakeholders in the industry have had for the future of this industry.
Today, the way the country is going, under the leadership of the new Prime Minister, a lot of things which are happening, we believe if the country does well, with the change in behavior, how investors start investing, are moving away from bank deposits and start realizing the advantage of investing long-term into capital markets, this industry has a great future. And if this industry has a great future, all of us, all stakeholders, in whatever form and manner we are associated with the industry, all of us have a great future. Thank you very much, and I would like to wish ICC the success for this conference. Thank you.
Our next item is release of a report prepared by our knowledge partner, Value Research.
A very warm welcome, ladies and gentlemen. Let me introduce you to our special panel discussion this afternoon. Our theme today, of course, is the Indian mutual fund industry, reforming sectoral dynamics and predicting the future. Now, when we met around the same time last year, the situation was a tricky one, but things, of course, are looking much better this year, starting with the new majority government at the center. You also have a recent rate cut by the RBI, a sharp fall in crude prices, huge inflows coming in from FIIs, lower inflation, and of course a very excited stock market. But when it comes to the mutual fund industry, the key challenges of minuscule retail participation, lack of customer awareness, under-penetration in cities beyond the top 15 continues to haunt the mutual fund industry. So today, as the mutual fund sector embarks on its third decade, let's take stock of the barriers that we need to break down. So let me start with you, Mr. Pradeepkumar. Let me begin by asking you, what really do you make of the sector today? How is it poised? Just to give off some statistics, AMFI, of course, has said that we've seen a 25% increase in assets under management from the start of this financial year. That's from March to December 2014.
I think, thank you, Shivani. And I think, industry definitely is poised for a great journey ahead. I've been a firm believer in the industry for, more than 23, 24 years. So I don't have, too many worries about the future of the industry. But I think, what really I'm looking at is the half-empty glass and the potential that we have going forward. In the period from September 13 to 31st December, which is about 15 months period, while the average AUM went up by 60 odd percent, the share of HNIs grew by 129%, while that of retail investors went up only 42%. And I did some further numbers, and what you also realize is that during this period, the market, the BSE Sensex went up by 47%. Okay. Now, from your average growth in AUM number, you had to take out the growth due to purely market appreciation. And if you take that out, what we see is that, the growth in retail AUM hasn't really kept pace with the growth in the market itself. So in my view, while a lot of retail investors have started coming back to the market, I think, we have just scratched the surface. We need to do a lot more to attract retail investors. And it's even more ironic, because see, the fact is that it is the retail investors, it's the smaller investors who really need mutual funds. You see, if you're saying that, market can give you 15% per annum on a long-term basis, who needs that higher growth most? It is the smaller guy. Because I think, for somebody with a net worth of 5 crores or 10 crores, whether the market grows at 15% or 13% may not matter too much. He will drive the same car, he'll live in the same house, he'll eat the same food. He'll send his children to the same college or school. But for a person with a network of maybe 10 lakh rupees, who may invest 50,000 rupees in a mutual fund, I think for him, investing in a mutual fund that grows at 15% as opposed to investing in fixed income instrument which is giving you 6% post-tax per annum, makes a big difference. So people who really need mutual funds have not been the ones that have come forward in a rush so far. But I think, there is a lot of work that is going on by the industry, regulator, government, etc. And that is evident from the fact that the share of folios from B15 cities, which are the relatively smaller places, it is now a little more than that of the T15 cities, according to the latest numbers. So I think that's an encouraging trend. But, I think it's just the beginning of the journey. We haven't, really covered too much.
So the bottom of the pyramid is essentially where most of the potential lies.
Yes. They are the ones who need it also.
They need it the most. Overall trend of 2014, Dhirendra, we've seen equity-oriented schemes, of course, growing to 30% by December 2014, according to AMFI figures. Compared to 2013, in 2014, we've seen the redemption from equity schemes reducing quite a lot and becoming popular in the year gone by. Do you believe the investor base has increased though?
No, nothing has changed fundamentally. 14-15, the financial year, if you look at it, it has been a case of very unique turnaround. Unique turnaround in a sense that mutual fund is a vehicle to access the equity and the debt market. Debt market is otherwise not accessible to individual investors, and it is good time for both of them. But I don't think investors should take great. Investors are very cheerful about it because if you look at average return for the next 3, 4, 5 years, the big chunk which came in 2008 or 2007, those investors will still be ending up with very moderate return. All we are, these short-term performance numbers are actually just magnifying the experience. But it is not true. Real investors haven't experienced the kind of gain because these numbers, if they are up 100%, we are assuming that nobody was invested and everybody invested last March and is willing to take out, which is not the case. I think we are still quite some time off. Some steps has been taken. It is democratizing mutual funds, but it is not and there are very positive symptoms. The focus on B15. But I don't know how sustainable they are because it is entirely driven by incentives. So tomorrow the tap closes and it will not be, there may not, and it is also a case of cross-subsidizing. The fund industry is getting an incentive on their total assets for selling a part of their assets, on a continuous basis in the B15 cities. So my sense is that it's not a sustainable model. And it is very much against the principle of mutual fund. So at some point it has to come to an end, and till the time it exists, it is doing a good job. It is achieving the goal. I don't know. So at some point we have to look at the cost-benefit analysis, the economics of it.
Right. Mr. DP Singh, some comments. What are AMCs and the industry overall doing to increase retail participation as well as acceptability? Because, given the current product mix, do you believe it's too sophisticated? There is room for more simplification. It needs to move to a B2C sort of an industry. Are AMCs offering sufficient comprehensive life cycle financial planning where you have products to cater to every point of the customer's life cycle?
Yeah, as far as products are concerned, sufficient products are available. But solution-based, specific solution-based, a particular product may not be as such there, but this is a general kind of, it's like a off-the-shelf. You have to link it with the goal. Any vanilla product can be linked with the goal and solution can be created. As far as AMCs or doing for B2C, I think B2C is viable with the kind of basis points where we are working on as an industry. it's not really sustainable for any industry to create a BNC model. That can be done only through technology. Technological tools can be there, but at the same time, whatever you say, any individual for the financial product needs some intermediary who has to advise him or her in what kind of product he has to be. Once he graduates to a level where he understands, then definitely he can do that. But for that also, when how far he believes in technology usage, but tools have to be developed. As of now, I don't think sufficient tools are available. There are a lot of innovation required for that. Nothing great has happened. If new investors have come in, and the industry has failed to retain their old investors. We are looking at overall number, like we are looking at the macro number, but we are not looking at the net number, how many people have gone out. That is something to be seen by the industry. When we need to, whatever has happened, but we need to work on something that the investors who are there in the industry, they continue to remain there. We have to get more wallet share from them. That is what we as fund houses, the industry needs to do, take the more benefit of this investor awareness money which is available, so that the more and more the education is provided to the at the bottom of the pyramid.
Okay. Yeah. And also talking about need-based product, Mr. Deshpande, we've seen recently launched MF-based pension scheme. A lot of other AMCs have also queued up with SEBI to get approvals for this mutual fund pension plan. Do you believe this is something that caters to life cycle needs, or would you also rather wait for the mutual fund linked pension retirement plan, which is going to also compete against the employee provident fund?
I think it's going to evolve over a period of time. Obviously, there are products in the market that have different tax tiers. So obviously, when you're talking of creating a platform where the products could actually be similar from a taxation perspective, yes, then I think there will be that kind of interest. But having said that, yes, I think there is this long pent-up desire in the industry that the industry should be allowed to actually launch retirement products, given the fact that in India today you do not really have a universally what you call social security related benefits across all the segments of the population. And if you have these kind of products which could actually be goal specific, can help people to really plan and invest for long term, and yet be very competitive from a return and tax perspective, yes, I think it makes sense for AMCs to look at that space.
Mr. Ladda, your comments, do you believe the ability to tap into fund pools like insurance as well as pension will be one of the key growth drivers?
See, at the end of the day, the whole product portfolio has to move up in the chain. And everyone needs a diversification from a product portfolio. So when we go and meet a client and client asks for various products, when we go up, ask and he needs a retail customer needs a simple product, but when you go and meet a HNI product, he needs a little more sophisticated product. And there we believe the asset allocation plays a bigger role. And we have been always pushing our product from a perspective of asset allocation, because whatever said in India, the customers believe there is asset allocation and he wants to invest money from asset allocation perspective. And mutual fund plays a very important role from a long-term perspective. From equity or a debt perspective, if you look at a long-term perspective, then the asset allocation plays a bigger role for us.
Moving on to customer awareness that we also talked about a little while ago, and demat accounts. We've been speaking about products across the board, a lot of financial assets. I think SEBI has also mandated NSDL to come out with one specific statement for products invested in across the financial spectrum. How exactly is NSDL taking that forward?
I will like to give some meaningful insight about the investor education, what we have been handling till now. We are hearing at a regular basis that because of the market conditions, stable government, we have seen more than 12-13 lakh folios getting added in this financial year. But when we compare the last year during the same scenario, we may find that the numbers may not be comparable at all. But when we look at a demat environment, we have also added close to 12 lakh demat account in this financial year. But when we look at the last year, it was not something like 2 or 3 lakh. Last year also we were able to get close to 10 lakh 50,000 demat account. Previous to that, it was also close to the 11 lakh demat account. So definitely the growth is there. but it is not so abnormally high because the way other industries are saying. But one of the driving factors is we also realize that there is a need to tap the new investors, and a good option to tap the investor is nothing but to go to the universities, colleges, and where general secretary of the college or the person who has been considered as well suited by the management of the universities and the colleges is appointed as a brand ambassador of the NSDL. And when we train them, we realize that when they go to the colleges, being among the students, they are able to encourage the investors who are the potential investor more effectively than outside third party going and encouraging and telling them what are the benefits of the product are.
Bringing us to the point of technology, Mr. Prasad, your company is already doing a lot to facilitate business for the mutual fund industry, and going forward, of course, with all the competition, we need leaner companies as well. And technology being used in terms of garnering more AUMs from the rural market as well. What are you doing in terms of creating both online as well as mobile platforms?
So as most of the industry participants are aware, CAMS leverages technology to provide service solutions, primarily focused at the mutual fund asset management companies, intermediaries and the investors. In the last few years, we have invested quite significantly to run what is known as the transaction portals for several of the AMCs. Many of the transaction portals are actually operated by CAMS behind the AMC's label, and some of the transaction portals operated by the mutual funds are actually supported by CAMS through web services and interfaces with our technology platform, which enables a seamless experience for the intermediary and the investor, be it in the financial transaction or the customer service processing. In addition to this, we have come out with new technologies, what is known as anytime, anywhere mutual funds. And these technologies are ubiquitous. These technologies are extremely powerful in terms of utilizing the power of various forms of distribution. These can be used by the IFA. These can be used by a mutual fund sales force who are on the move. These can also be used by the banks, both private and the public sector banks, who have enormous amount of banking governance and regulatory oversight on them in terms of not having access to third-party platforms, third-party products in their offices. And also they are not permitted to have internet-based connectivity to third-party applications such as CAMS in order to facilitate the mutual fund transactions. So what we have done is we leveraged the 2G, 4G and the Wi-Fi technologies that are prevalent now, and we have given 3-4 solutions which are available in the marketplace. Some AMCs have already taken it up, and these work in the form of a slate, which is like a tablet, which can be used for setting up a mutual fund account anywhere. You don't need to set up, you don't need an office, you don't need an official point of acceptance of transactions.
On that note, I'd like to wrap it up. We're completely out of time. We've discussed a lot of dimensions, issues, as well as solutions that will chart the course for the next decade of the mutual fund industry, and hopefully that will catapult the sector into the next growth path. Thank you very much, ladies and gentlemen, for being a part of this discussion.
Thank you.